Let me guess. You've been thinking about getting into trading. You open YouTube and suddenly everyone is screaming, Forex is the best. No, stocks are safer. Crypto is where the real money is. And now you're sitting there thinking, okay, but where do I actually start? If that sounds like you, this video is exactly what you need. In this video, we're going to break down Forex versus stocks versus crypto. By the end of this video, you'll know what each market actually really feels like, the risks no one warns you about, and most importantly, which market fits your personality. Because there is no best market, there's only the best market for you. Before we compare anything, let's understand what each market actually feels like when you trade it. Forex. Forex, or foreign exchange, is the largest financial market in the world. You're trading currency pairs like Euro US dollar, Great British Pound US dollar Japanese yen, Australian dollar US dollar. And the best way to describe Forex? Forex is like a 24-hour diner. It's always open during weekdays, it's always moving. And most of the time, it behaves predictably. Forex reacts to interest rates, economic data, central bank decisions, global news. And why do beginners like Forex? Because spreads are tight, liquidity is massive, charts are clean, price action actually makes sense, and you don't get random 50% candles out of nowhere. If you like structure, rules, and a calmer trading environment, Forex feels comfortable. Stocks. Trading stocks means you're buying pieces of real companies. Companies like Apple, Tesla, Microsoft, Nvidia, Amazon. Stocks are influenced by earnings, company performance, industry trends, economic cycles. Compared to Forex and crypto, stocks move slower. And that's not a bad thing. Stocks are perfect if you like fundamentals, you enjoy researching companies, you think long-term, you prefer logic over speed. But intraday stock trading comes with challenges: limited hours, wild market opens, volatility spikes, and for US traders, the $25,000 pattern day trading rule. Stocks are stable, logical, and easier to understand emotionally, but not always beginner-friendly for active trading. Now, let's talk about crypto. Crypto is open 24/7. It moves fast, it ignores traditional rules, and it doesn't care about your stop loss. You're trading assets like Bitcoin, Ethereum, Solana, XRP, and hundreds of altcoins. Crypto can double in a week, crash overnight, create insane trends. Reverse without warning. Crypto is exciting. Crypto is emotional. Crypto is brutal if you're unprepared. If you love volatility, fast setups, and strong trends, you'll feel right at home. If not, crypto will test your sanity. Now, let's compare these markets based on what actually matters. Volatility, how fast prices move. Crypto is by far the most volatile. Huge swings, big opportunities, big risks. Forex has medium volatility, steady moves, clean structure. Stocks are low to medium volatility, slower unless you're trading small caps. If speed excites you, crypto wins. If calm execution matters, Forex or stocks feel safer. 2. Market hours. Forex trades 24 hours a day, Monday to Friday. Crypto trades 24/7, no breaks ever. Stocks have limited trading hours. If you don't have a fixed schedule, Forex and crypto give you flexibility. If you prefer routine, stocks fit better. Starting capital. Forex allows micro lots. Crypto allows fractional buying. Stocks usually need more capital, especially for day trading. This is why many beginners start with Forex or crypto. Difficulty level. Stocks feel the most intuitive. You're trading real businesses. Forex sits in the middle. You need to understand macro and technicals. Crypto is emotionally the hardest. The speed and volatility can overwhelm new traders. 5. Leverage. Forex offers high leverage. Crypto offers high leverage. Stocks offer very little leverage unless you use options or CFDs. And remember, leverage doesn't create skill. It only amplifies mistakes. Now, let's make this personal. Choose Forex if you like structure and routine, you prefer technical analysis, you want clean charts, you don't want wild drawdowns, you value liquidity and precision. Forex is the professional trader's playground. Choose stocks if you care about fundamentals, you're patient, you enjoy research, you're building long-term wealth, you want stability. Stock traders tend to be calmer and more analytical. Choose crypto if you thrive on volatility, you love fast setups, you trade odd hours, you're comfortable with risk, you want explosive opportunities. Crypto rewards speed, discipline, and emotional control. Here's the honest answer. There is no best market. Only the market that matches you. A volatility lover will get bored trading stocks. A long-term investor will panic trading crypto. Someone who wants calm execution might fall in love with Forex. The biggest mistake beginners make is choosing a market based on hype instead of personality. If you're still unsure, follow this rule. Start with the market you understand emotionally. If currencies make sense to you, trade Forex. If you love companies, trade stocks. If you're passionate about blockchain, trade crypto. The market you connect with is the one you'll trade consistently. And consistency, not excitement, is what actually creates success. If this video helped you, hit the like button, subscribe for more such videos, and comment down below which market are you starting with, Forex, stocks, or crypto. I'll see you in the next one.
Hola Prime, trade with transparency.